All right. Hey, what's going on, everybody? This is Aaron Yoon coming at you from New York City. Happy Friday. No camera today, having some technical difficulties with the camera. So you are just seeing a straight up slideshow. Today we're talking about the difference between trading and investing. Oftentimes people think they're one and the same. If you pay attention to uh, marketing ads for apps like Robinhood, you'd think it's pretty much the same thing. Stock trading, stock investing, what's the difference, right? There's actually a fundamental difference in mindset and philosophy that is crucial if you want to have success in either. Um, it's crucial to know the difference if you want to have success in either. So we are going to get started and talk about the difference. So let's move right along here. Let me get my trusty little pointer and let's proceed. So investing versus trading. Investing assumes a couple of different things. It's a very different paradigm than trading. Although there are a lot of similarities, there's a lot of differences as well. One of them is that for investing, the mindset is that you're investing in something that you believe will increase in value. It'll grow over time. And it's usually for the long term. For investing, usually there is a time frame that is measured in years or decades. And investing implies usually everything that I talk about today is going to have some form of exceptions to the rule. We're talking about generalities, but so in general, investing implies some form of ownership. Like, for example, buying a home in an improving neighborhood, in an up and coming neighborhood where the schools are getting better, the prices are getting better, value is going up. This is a very common investment, quote unquote, for people, for new families, young adults starting new families commonly invest in their home in a nicer neighborhood with good schools and stuff. Technically, there's a flaw in that kind of thinking, but we're not gonna get into that. That's beyond the scope of today's video. So, but a family that invests in a home in a nice up and coming neighborhood for their children and whatever, they believe that the assessment of what they believe their home value to be will go up. If it's in real estate, I'm using real estate as an example here, but commonly you hear location, location, location. Well, that is one way of analyzing, a simple but effective way of analyzing the fundamentals of a real estate property. If it's well located, then it will usually appreciate it, right? For example, I live in New York City. Neighbor right now, during smack in the middle of coronavirus, it's not as popular of a place to be living, but over time, when life gets back to normal, restaurants come back, theaters come back, schools are in session again, then you can expect value of New York City real estate to go up again. Whereas right now, a lot of people are leaving New York, so a lot of the suburban areas might be value might be going up. So moving forward to trading. Trading is a trader has a different kind of mindset. A trader looks at pretty much only one thing, which is the price movement. Is price going up or is price going down? And they're betting with or against the price. And there's lots of different ways and instruments to either bet on something going up or bet on something going down. And oftentimes the future of the asset itself is it doesn't really matter because they're gonna get rid of it. It's about buying and selling, right? So they're gonna get rid of it relatively quickly before the actual value of the asset actually starts to matter. So the time frame is often irrelevant because there's high frequency trading where you trade in a matter of seconds or minutes, and then there's longer term trading, which is what I do, which is days, weeks, or months, even years, right? So that's their time frame is very irrelevant. It's more about the mindset. So that's a very common misconception. Most people hear trading and they assume day trading, which is where you buy and sell stocks on the same day. You don't hold anything overnight. That's very, and they assume if you hold something overnight, that's automatically investing. That's actually a flawed, it's a misconception. So, because trading is just a matter of buying and selling, disregarding ownership and time frame, whether it's minutes or months, it really doesn't matter. A good example of this would be wholesaling and flipping houses, where when a wholesaler doesn't really care to live in the house. They don't really care to, for example, they don't really care to that the house is in a really good location, where they want to move in, or is it a nice house? Is it a 2-bedroom, 3-bedroom? A person who is wholesaling or flipping often does not care about these things. They just care about making money on the flip when they sell it. So there's really more of a speculation of the movement of price. So it's like, for continuing with the wholesale example, if I can buy a house for and get a good deal on it for whatever reason that I have a connection, I can get it for half off or more, then I know I can definitely sell it to someone who is either doing a rehab or like a fix and flip or whatnot, and sell the contract. I'm being the middleman. Trading, you're often playing the role of the middleman. Ultimately, it's just a guessing game. Both investing and trading is just a guessing game. So the real question is, what are you betting on? Are you betting on, for investing, you're betting on the intrinsic value of the asset. If you're investing in gold, you're betting on the fact that gold in and of itself is going to become more valuable as time goes on, because either for whatever reason, like because you believe there will be less of it, because you believe that currency prices or commodity prices are just going to go up in general. You have to have a fundamental belief that the intrinsic value of your asset is going to actually go up. A common saying for this type of mentality is that a rising tide raises all ships. So oftentimes, one of the things that's going to help all investments is a rising tide, such as inflation. The cost of everything is going to go up over time, so that'll actually help your investment philosophy, because you're mostly betting on things going up. Whoops. Okay, whereas with trading, you're betting on the direction of price, and there's a lot of financial instruments, whether there's a lot of financial instruments out there for you to make money when something actually decreases in value, for you to make money when something increases in value, which is what makes a lot more sense, and for making money when the value doesn't really change at all. If you're an options trader and you're listening, you know exactly what I'm talking about. You can make money on price going up, down, sideways, or nowhere, right? There's ways that you can do that. You're betting on the direction of price. But in general, you want to buy at a low price and sell at a high price. That part doesn't change. It's just a matter of the order in which you do things. Sometimes you sell first and then buy low later. Sometimes you buy first and then sell high later. It's a buy low, sell high type of game. That's how simple it is. Easier said than done, though. The idea is simple. The execution is incredibly difficult. So which is better is really the question, right? Because neither is easy. Investing usually takes longer to determine if you are right, quote unquote, right about your investment. If you look at this might be going back a ways, but if you look at something like TiVo, for example, the idea, the fundamentals of pausing and recording live TV, it's a great idea, and it's a very, very popular idea today. But TiVo itself as a stock was a commercial failure. It never really traded. It tanked as soon as it went public, and it never really traded above like 10. for years, right? So it was a commercial failure. So you might have had the right idea, but you invested in the wrong company, and it would have taken you a while to determine that whether you were right or wrong, even if you had the right idea. A good example of this, another good example of this in real estate and or more specifically in business is like Facebook, for example, went years with no profit. But the idea of it was so valuable that investors from all over the place, venture capitalists, were willing to dump money into it, even though it was a business that had no profit. So, what kind of skill do you need in investing to be a successful investor? You need to be able to accurately analyze and forecast where a company, a property, an industry, so on and so forth. You need to be able to accurately analyze where price will be in the future, whether you're talking 1 year in the future, 10 years in the future, or way decades into the future. You have to be able to forecast. You have to almost be able to see the future. That's kind of the skill, right? That's why it's an incredibly difficult skill, which is why we rely on experts and advisors to help us with this and tell us what they think, and we'll just go based on the advice of experts. And by far the most important skill here is patience, and patience is a skill. Now, the thing that helps patience that I don't have written here is conviction. If you really believe in your investing paradigm, then it's much easier to be patient because you have faith. A good way to put this right now in 2020, despite the COVID pandemic, the technology sector has been booming. The fact that most people are working from home is probably helping matters. Like everyone's buying new computers, better internet connection, better video chatting equipment like webcams and microphones and all that kind of stuff. So Zoom stock went crazy. Skype and all that. Everyone's Skyping or Zooming or FaceTiming or Google Hangoutsing or whatever nowadays. So the tech sector is really booming. Now, if you're like me and you have a strong conviction that this tech boom is going to continue long after COVID is not really plaguing our lives anymore, then it's easier to buy and sell or buy and hold technology stocks or technology ETFs, index funds, whatever way you want to invest in technology. It's easier for you to be patient with it. However, that kind of long-term thinking also attracts lazy and misinformed beliefs. This is the downside to it. This is why it's so difficult, because there's two sides to every coin. Sayings like, "Oh, real estate is always stable." Well, I mean, if you ask anybody who had a real estate investment business in 2007, 2008, or rather in 2007, they probably thought they were unstoppable until 2008 and 2009 came along and, to put it nicely, probably humbled them. Other misconceptions is that all stocks go up eventually, so just don't sell through the crash. Well, you're wasting time when you do something like that, and there are plenty of stocks like what I just mentioned, TiVo, that actually don't go up eventually. There are plenty of stocks. They might not be as well known, but there are plenty of stocks that never recovered from the global financial crisis in 2008. Some stocks actually went to zero, which means you're done. It's game over. You're out of it. So for trading, the game is slightly different because the high frequency and volume nature of the trading game provides more instant gratification. So you're able to determine whether you're right or wrong much, much faster. Now, this is commonly seen in the day trading game or scalping game, which is even faster, right, than day trading itself. And the required skill here is kind of similar, but there's more to it. The timing. buying low. I know everyone says that, market timing is impossible, but that's actually not true. If you're a trader, then market timing is everything, right? That's your entire industry and philosophy is buying low, selling high, whether it's fast or slow. The other required skill is discipline. Now, this is probably there's a lack of discipline a lot these days because so much of our day-to-day lives are really high speed and instant gratification oriented, not as much discipline these days. Consistency, also very, very difficult to find. And patience, again. These skills will make or break a trader. Having these skills will, over time, will ensure success, but not having these things over time kind of will guarantee failure and losses. And the high speed nature of this trading game attracts the get rich quick mindset. So that's why you hear horror stories from both sides of the field. Common sayings like earn $10,000 a day trading options or forex, earn $10,000 a week trading day trading or whatever. This is a common kind of marketing message that you see, especially nowadays on social media. Any measurement of trading where you're measuring dollars per day already in and of itself is a flawed measurement. So that's a free tip for anyone who is getting attracted and kind of triggered and seduced by these types of marketing messages. That's a free tip for you there. It's a bonus. Anything that measures dollars per day and is like, oh, you can do this much per day is a flawed mindset, because $10,000 a day is a lot or a little purely based on how much money you're starting with. But a lot of these marketing campaigns don't even address that. Case in point, when I was working at a hedge fund managing $20 billion, we saw millions of dollars being traded back and forth a day. We've had days where we made $30 million, and we've had days where we lost like $100 million. To a $20 billion hedge fund, that is kind of normal. But if I were to say, hey, join me for a webinar on how I made $17 million a day, it wouldn't right away you'd think that there was something wrong with it, even though that's actually true and accurate. Now, when I remove some zeros and I actually say a number that's sexy but not unreasonable to the average middle class person, like $10,000 a day, or even $1,000 a day if you find that more believable, then all of a sudden you are, because you find it believable, you're willing to listen to my get rich quick scheme. The reality is, at a hedge fund, we never we never had daily profit goals, ever. And the best traders I know don't have that at all. So any kind of measurement of this sort is already a flawed type of thinking. So that's a bonus for everyone. So really what you want to learn is the best of both worlds, and that's what really this channel is all about. I will be doing more videos on this exact type of thing. If you're already a follower, if you've already been watching my videos for a while, you already know that I have the best of both worlds automated in a investing / trading app. This video isn't about that app, so I'm not going to really talk about it. But if you want to know more, make sure to like and subscribe and stay tuned for the next video from YouTube.